Hi there and welcome to the MoneymanShow. In this video I'm going to show you how you can make money trading the ES futures using the stochastic divergence. I already made a video like this a while ago on 1 minute chart. This is the 5 minute chart of the ES. Before I do that, I will invite you to visit my site TheMoneymanShow.com, where you can have free access to a lot of good stuff, including real-time quotes from stocks, commodities and currencies. So about the trading, this is I will show you the previous week and some ground rules. Okay, so what is the stochastic divergence? The stochastic divergence is when a price, in this case to the long side, when you have a lower low and the stochastic on both lows diverge from the price, meaning if the price is lower and the low of the stochastic in the second low is higher, you see, low and high, see. So when this happens, there's a divergence, and the time to enter, it's all about the stochastic itself. So you should enter when too long, when the stochastic goes above 20. Okay, so you have this and you should enter on this candle. So the stochastic is 28 right here, and the target for this move will be around this area. Now, to be more specific, I advise putting the retracement, the Fibonacci retracement, and to enter on the 75% and exiting on the 25%. This would give you half of the move as profit, and your loss would be 25% here. So you will have around 2 times the loss, the profit for your loss, which is a very good risk reward ratio. Okay, so if you enter here and you exit here, you would have 3 point gain. Okay, now this for the long. For the short, you see this area, you have a higher high, but the stochastic in the second eye is lower. Another, again, the divergence. You should enter when the stochastic is under 80, or both of them under 80, or the blue line is under 75 and the other one is near the 80. Okay, so let's see where this happens. This happens in this candle. Okay, so you do the same thing, the Fibonacci retracement from the low, and you should enter in this area and exit in this area, and it will take several hours, and it would have been a move of 3.5 points. Okay, so this would have been a very good day. 6.5 points on the S&P. It's a very good day. So again, to the long side you have a lower low and the stochastic is higher. To the short side you have a higher high and the stochastic is lower. Okay, another thing, both of the stochastic here should be, and especially the first one, should be in the oversold area. Okay, and this one should be in the oversold or very near the oversold area, and this one for the short should be in the overbought area. Okay, now this was the 27, now the 26. Again, higher high, stochastic is lower, you should enter in this candle right here. Again, you do the retracement, you should enter here and exit in the 25. It would have been at 2.5 handles. Handles is a point. Okay, this long, the same thing. You don't have the lower low, but it's at the same it needs to be at least at the same position, okay, because here the stochastic is actually much higher, and you can see if you put retracement again, entering in the 75, exiting in the 25, you would have 2.5 handles profit. On the 25 we have a short, same thing, entering when it crosses below 80. It would have been in this candle, you'd enter it in the next candle right here and would exit here to 3.25 handles. As you can see, stochastic is lower, not much lower, but you can see the big difference in the price, and the stochastic is a little lower, so there's a big divergence here, even more than in this one, okay. Here on the 24 you have the same thing, higher high, stochastic lower. You can put the retracement. So why didn't I count this one? Because when the price makes above the below the 80, it's on this candle, and for you to have a good risk reward ratio you should have entered in the 75, but it never goes there again, so I didn't count this trade, okay. It goes to the target, but as it doesn't give you the entry point, I wouldn't count this one. On the 23 you have again higher high and stochastic is lower. You should enter in this candle. Let's see if you have, yeah, you enter here and you exit here, 2 points, okay. So, and this would have been a week where you could have made 16.75 handles on the S&P in 1 week. It's very good, and you can see that you don't get any other divergency. Well, you get in this one, but it's not very clear. You should try to get clear signals, okay, not eliminate the noise. Even in this one I didn't count because there's a divergence, you can see it clearly, but there's too much noise here, it's not very clear. So you should try to be very specific about your entries. See here, that it doesn't even go to the out of the overbought, so I didn't count this one either. So there's not another trade here. So all the trades that we could have done were positive on this week. The previous week was a little slower, but we have one trade here. As you can see, higher high, stochastic is lower. You should enter in this candle here. Actually, it's not, yeah, it's here. So you should have entered in this candle right here, actually in this one, and it doesn't, well, it doesn't, so I'm not counting this one either because it doesn't reach the 75. So it almost reached, but it doesn't, so I'm eliminating this one. And but as you can see, this on the lower time frame probably would have worked, okay, but not on 5 minutes, so I'm not counting this one, even if it works, but not with the risk reward we want. So taking this off. In this one, as you can see, higher high, stochastic is lower, and you do the retracement. You can enter on this one and exit on the next 5 minutes. You would have gained 1.75 handles. Immediately after you have another one. However, even if this works, it's not on this time frame because not only it didn't reach the overbought, as when it does give you the signal, it's already on your profit target. So I'm not counting on this one either, but you can see the divergence. It's a little higher, and the stochastic it's much lower. Okay. The previous day, again, good trade. You can see higher high, stochastic is lower. You would enter in this one right here, perfect trade, enter. 10 minutes later you are exiting with 2.5 handles profit. And as you can see, now not in this one, you see higher high, but the stochastic is also higher, so there's no divergence here. You can see I'm only catching the here, no divergence either. Here there's a divergence, however this doesn't reach the overbought position in the red one, in the red stochastic, so I'm not even counting on this one. Okay, and here it's already higher than this one, so this high and the stochastic is higher, so no divergence here. And on the 16 we have a good and a bad trade. As you can see, this is a very clear divergence here. There's a low, and the low and the stochastic is higher. Okay, and the difference is very significant, so this was a very good trade. Also, you should enter in here, you do the retracement again, you enter here, and you would exit here, and you would have made 3.75 handles. And you have a next trade where you have a lower low and the stochastic is a little higher, but it doesn't reach our target. Okay, it only goes to 38%, not our target, so I would count this as a loss, minus 1.75, giving us a week of, not this because I have to take the other two, 6 handles and a half and 25. Okay, so we reviewed 2 weeks of trading the ES using only the divergence of the stochastic with the price, and we would have made 2 profitable weeks. One very good week, 16 handles, almost 17, and the other one 6 handles, not bad at all. Okay, so if you have any questions about this kind of trade, feel free to send me an email to TheMoneymanShow@gmail.com. Hope you enjoyed it.